So today is Monday, March 9th. The market just take a big downturn. I'm here to give you guys my opinion about the current market situation and where I think it may go from here, what stock I'm looking at and what stock I'm planning to buy. So a lot of investing YouTubers already go over how the coronavirus may affect the stock market. So I'm not going to go over that. I'm just going to go over what I've been observing so far in the market from a technical standpoint. Now, if you look at the chart of the S&P 500, now this is a weekly candle. So each candle right here represent 1 week. And right now currently is 11:42. The market's still open just because it's a future market. It trades continuously 24 hours from Sunday to Friday. And even though we have a lot of news about how it's like almost in the world where the stock market crashing, but if you look at it, it actually from here to there is actually only down by 20.53%. Compare that to the last pullback in the end of 2018, the beginning of 2019, it only pulled back. It actually pulled back more. It actually 21.45%. So during that pullback, it's much more than currently we're experiencing. Okay, it's not a lot more, but it's still 1.45% more. Now, the second thing that pop out to me, if you look at this pink line right here, it represents 200 moving average. And every single time the stock hit that price, it bounced. So far, since we in the bull run, the only two times it got to that pink line is in the beginning of 2015 and the end of 2018. So in my opinion, the S&P 500 could reach down to the 260 to 265 level. Could it go down more than that? Certainly it could, but since we've been in the bull run, every single time it hit that pink line, which is 200 moving average in the weekly chart, it had been continue a bull run from there. Now, if we drop farther, we will be enter the bear market territory. So from there, I do not know what's going to happen, but so far it's a great bet if you want to buy in some certain stock. It when the S&P 500 hit around 260 to 265 level. Now, you probably wonder, does technical analysis actually work? Well, it does when it wants to. What I mean by that is if you drop down to this pink line right here, okay, that technical analysis worked perfectly because it's bounce up every single time it hit that pink line. But if it bounce down to this level right here, I would call it hitting the support back here. That's why it bounced. That is why I say technical analysis work when it wants to. But for me, I'm just using it as a guide to tell me when I should enter the market, a large chunk of my portfolio. So yes, it's just a guide for me. And don't get me wrong, I still continue average down around this level. But the thing is, for the large chunk portion of my portfolio, I want to invest at the key level. And around 2,600 and 2,650 is a key level for me. And if you drop down to the 2,300 levels, I would add another large chunk. So yeah, I'm just using it as a guideline, and I do want to share that with you. And the second thing that I noticed in the cruise industry, people been jumping up boat. In the airline industry, people been going skydiving. No shit, Kyle, we already know that. Now for those stock like Delta, Royal Caribbean, Carnival Cruise, if you invest in those stock, you better be prepared to hold it for long term, because those stock tanked the most during the market recession. Not only that, during the market downturn, they may cut their dividend, and that may send the share down even farther. And those stocks take a while to recover where it dropped from, and on the way up it can be very volatile. So make sure you plan to hold those stocks for a long term. Now, I did grab some share of Royal Caribbean today when it down by 20%, and even at some point the share was down by 25%. The valuation is just so hard to pass by, but for sure this is not going to be the main stock I'm going to keep adding on. The companies that I plan to load the boat on is a company that has strong fundamental as well as strong market presence. So as soon as the crisis over, it can bounce back really fast. First company I plan to load the boat on is Google. Google currently trading at $1,215 and have a PE currently of 24.73. Now, its average 5-year PE is 28.52. So if you just compare the 5-year average PE ratio to the current ratio, you certainly get Google at a discount of 14% right now. Now, Google seems like a company that would not get affected too much by this coronavirus, since people can even watch more YouTube videos to find out what's going on, and also using a search engine to find out what is going on. Now, don't get me wrong, because Google earnings also may get hurt if this crisis keep dragging on, because most of their revenue is coming from advertisement. And if all other company is doing bad, that means they can spend less on advertising. That means it can hurt Google earnings. But I believe if it's a short crisis, Google can be one of the companies that can bounce back the fastest and And even if it's a long crisis, when it over, Google can bounce back the fastest compared to most other companies. Now, the second stock I plan to load the boat on is Facebook, because just like Google, I think Facebook would not get hurt by the coronavirus crisis as bad as most other companies. Right now, Facebook is trading at $169.50 with a PE ratio of $26.37. Now, the average 5-year PE for Facebook is 29.37. If you just look at the 5-year average PE, you currently get Facebook at a 12% discount. If this crisis keep dragging on, it's gonna hurt other company and it gonna hurt Facebook, because most of Facebook revenue also come from advertisement, just like Google. But again, it's gonna be one of the stock that gonna bounce back the fastest after the market correction or recession. Now, the third stock that I plan to load the boat on and I'm watching very carefully, which is Visa. Visa right now trading at $171.13 with a PE ratio of 32.51 and a 5-year average PE of 31.996. Now, if you just look at the PE ratio, you probably think the stock probably just at the fair price or maybe just a little bit above fair price. But if you look at the chart, it seems like Visa never dipped. This is probably one of the biggest dip they have since the recession. Now, even though this seemed like a high PE, but Visa continued to grow to its valuation. In the past 5 years, Visa gave you 170% return, including this market correction. Short term during this crisis, it probably boosts up Visa revenue because people are not going to spend cash, because that can require person-to-person transaction. So they're gonna have to do most of those in online shopping, and it's gonna be through credit card and debit card. And if this crisis drag on, it certainly can hurt Visa because the consumer confidence is gonna go down. People are gonna spend less money, which is gonna be less transaction for Visa. So yes, Visa gonna take a pullback if the market downturn. But yes, most of the stock gonna take a pullback. But I don't think Visa gonna take as much as a pullback compared to the rest of the market. And once we back into the bull market again, Visa gonna be one of the best performing stocks. So that is all the 3 companies that I plan to load the boat on. And yes, I'm gonna use the S&P 500 as a guideline to when to load the boat when the S&P 500 hit around the 260 to 265 level. So yeah, that is my plan for this correction. I just want to share my thought with you guys. Please don't follow my advice. This is only for entertainment purposes only. I'm only doing this to share with you guys my train of thought. But yes, that is it. Thank you again for watching until the end. If you can click the like button, click the subscribe button, turn on your notification bell. Again, my name is Kyle, your average investor, and you guys have a great day.